Well, Maha, there have been a lot of developments in this entire Adani Hindenburg rout today. Let's just take you through all of the news points from today. The Reserve Bank of India has said that the banking sector is resilient and stable amid concerns over the exposure of banks to Adani Group stocks, given that the stocks have been tanking ever since the Hindenburg report came out on January 24th and alleged stock manipulation and fraud in the Adani Group. Now, the Reserve Bank of India has said that reports expressed concern over bank's exposure to a business conglomerate, and it has released its first official statement on banks' exposure. So this first official statement has come from the Reserve Bank of India now. Now, the Reserve Bank of India says that the capital adequacy, asset quality and liquidity of banks is healthy currently, and that banks are compliant while the Reserve Bank of India is monitoring the stability. And in fact, that seems to be the center stand at large too. The Finance Minister and the Finance Secretary have reassured investors. There were concerns over investors' money parked in public sector banks such as SBI and LIC as well, considering that these financial institutions have investments in the falling Adani stocks. But the Finance Secretary clarified LIC's and SBI's exposure to the stocks. Listen into what he said.
Update of the SBI and LIC's exposure to any given company is far below the level where it should be a concern to any investor in any of these, in the banks or in the insurance policies. It is tiny. The fate of any one company will not affect any of these institutions significantly. And therefore, there is absolutely no cause for concern for either depositors or policy holders or investors in any of the nationalized banks or insurance companies.
Let's now look at what their exposure really is. LIC has said that its exposure to Adani Group is 0.975% of their total assets under management. SBI has said that loans to Adani Group account for 0.8 to 0.9% of their total loan book. Bank of Baroda has said that their exposure is 25% of the permitted limit. The SBI chairman Dinesh Khara says that there's no cause of concern just yet. Listen in.
We have lent to Adani for projects which are in fact having tangible assets and which are having adequate cash generation, and they have been in a position to meet their obligations. And as far as the quantum is concerned, that is actually just about 0.8, 0.9% of our total loan book. So from that point of view, we don't envisage any kind of a challenge in terms of their ability to service the loan obligations which they have taken. So, and also we have not extended any loan against shares, etc. There is no such portfolio which we have. So the impact of the stock market prices of the stocks will not really impact any of the margin calls, etc., and any of the loans which they have raised from us. But any special engagement we have not yet started.
Meanwhile, Adani Group dollar bonds rallied today. According to Bloomberg, financial services companies Goldman Sachs and JP Morgan say that Adani bonds can offer value due to their strength of certain assets. And not just them, credit agencies too today commented on Adani Group's credit profiles. US-based Fitch, a credit rating agency, said that there's no immediate impact on rated Adani entities' credit profiles. These profiles that essentially reflect the loan repayment capabilities of a firm. Fitch Ratings said that they expect no material changes to the cash flow that they forecast for the Adani Group companies. Moody's Investor Service say that they are assessing the financial flexibility of Adani firms, and importantly, they say that adverse developments that are happening recently can reduce the Adani Group's ability to raise capital, though it adds that the group's ratings are underpinned by strong cash flows and market position. Now, these comments led to some recovery for Adani stocks that have been tanking for the last few days. But though markets gained over 1.4%, Adani stocks continued their slide. Sensex gained 909 points and ended at 60,842, while Nifty gained 243 points and ended at 17,854. Adani Enterprises share recovered from its 52-week low on BSE, though it continued falling on the National Stock Exchange or NSE. Let's just look at the performance of the shares on both NSE and and BSE. We're giving you a comparison. NSE, of course, has a larger volume of trade compared to BSE. So Adani Ports and Special Economic Zones gained 5.61% on NSE, while 7.98% on BSE. Adani Enterprises also gained Adani Enterprises actually lost on NSE by 2.19%, but it gained on BSE by over 1.2%. But Adani Total Gas, Adani Power, Adani Wilmar and Adani Transmission and Green Energy hit the lower circuit in both NSE and BSE. Overall, the Adani Group has lost over $100 billion US, which is half of their market valuation since the Hindenburg report came out on January 24th.